Good afternoon. This is Clark Neighbors with the final market outlook for December of 2012. Let's look back into 2012, see what kind of returns we had for the year, just comparing commodities for the year. Corn is up about 7%, beans up 19%, wheat's up 19%, live cattle up 5%, hogs up 8%, natural gas up 16%, crude oil down 8%. Many of the soft markets, cotton, sugar, cocoa, some of those were down for the year. And interestingly enough, the stock market, the S&P, up 14% as a comparative standpoint if you're looking at it from an investment standpoint. Fairly quiet trade here the last week or two, so as we go into the new year, see rebalancing, look at the crop report in January 11th. Those are some game changers, but it's been fairly quiet, so I want to look back and just a few thoughts looking into 2013. Looking into the new year, there's always plenty of promise and hope for the upcoming year. This may translate into 3 stages in your marketing of hope, fear, and greed. In recent days, many business channels have been interviewing analysts on what commodities to invest in 2013. And I find it entertaining the longer I'm in this business that someone knows what direction the market's going to go for the next 365 days. With all the sophistication of technology, research, predicting the markets, let alone the weather over the next 365 hours is nearly impossible, especially when you have end of the year or end of the earth type scenarios, fiscal cliffs that intervene. Current commodity era goes back over the last 6 years. If you go back to 2006, seems to remain in force as an asset class. There are plenty of places to get return on your money, no better than the Midwest farmland over the last 5 or 6 years, but that's a different story for a different day. This change has brought around many new players all over the world in the investment club. Hedge fund investment crowd has created new trading models which are all about speed and volume. Currently there are over 40% of the futures exchanges taking place. About 80% of the Wall Street volume are generated by computers. Higher commodity prices along with hedge fund movers and shakers create a new environment that creates a lot more volatility, but a lot more risk and a lot more opportunity. 2 questions that come about on these new commodity markets we hear from customers. 1, have hedge funds or computerized trading changed the markets? The obvious answer is yes, in some degree. This is not your father's commodity market anymore. I was recently reading an old newspaper clip or article about my grandfather back in the late 40s. There were 3 alternatives to selling marketing your grain back then: 1 to sell, 2 to store, or 3 to feed. It's much different than it is today. The days of simple marketing are as old-fashioned as drugstore soda fountain that was common back in the day. Secondly, have funds and computerized trading. The other question, I should say, is have funds or computerized trading taken over fundamentals in the marketplace? There's a strong argument that may be the case on a day-to-day or week-to-week situation, but it's obviously not, repeat, not the case in the long term. The club I referred to earlier is the trader that feels the market revolves around supply and demand. If you don't think the market or people react to price changes, just look around you. Higher energy prices have created an entire new wave of energy trade. The U.S. could become energy independent or a net exporter of energies over the next 10 to 20 years. Who would ever dreamt that? These are new sources of energy that have not been found without these higher prices. In fact, this can be overdone as natural gas prices have become rather cheap as technology of finding and producing natural gas has outpaced current demand. So the marketplace does find that. Recent Wall Street Journal article I thought was interesting, titled "Our Fading Footprint for Farming Food." Here's just a few samples out of that article. In the U.S., the total corn yield and the total corn acreage tracked each other in lock and step from 1870 to 1940. There was no change in the average yield per acre, but between 1940 and 2010, corn production almost quintupled, while the average devoted for growing corn fell slightly. Similar divergences appeared later in other countries where India's wheat production increased fivefold after 1970, while acreage crept up by just 1.5 times. Chinese corn production rose sevenfold over the same time frame, while average acreage merely doubled. Growing affluence leads people to eat more calories, and especially meat. Since it takes 2 to 10 calories of maize or wheat to produce a calorie of meat, depending on the animal, carnivore demands more cropland. But as a country gets richer, this is what's interesting, total calorie intake soon levels off. Even if as wealth continues to rise, the change in meat consumption decelerates. Chinese meat consumption is now rising less than half as fast as Chinese affluence. The Indians have grown richer without taking too much new meat at all. Researchers also find that over the next 50 years, people are likely to release in some form farmland at a land area about 2.5 times the size of France or 10 Iowas. If it not for biofuels, say some scientists, farmland usage would already be declining. Predictions of peak oil repeatedly proved wrong, but the factors that made them wrong, productivity and technology, are essentially the ones that make prediction of peak farmland likely to be right. So technology is very key, and that article goes on to that. The corn market has reacted to the demand of the biofuel industry over the last 6-7 years, adding about 10 million acres. Considering that, the recent demand spike is flattening with the maturity of the biofuels industry. Will the market need to move to another direction? The answer at some point is probably yes. When this occurs, expect the prices to retreat, as the market will need to invigorate more demand structure. The bottom line, the answer to the question, is a very simple concept of supply and demand fundamentals are still in play. Keep in mind, one of the best definitions I feel for capitalism is the market always moves towards break-even. Again, just a few thoughts as we delve into 2013. Here at B.I.S. Commodities, we wish everyone a prosperous and healthy 2013. And again, it's just a little food for thought as we go into the new year.